Good afternoon, everyone. Welcome to our Redefining Hong Kong series. This is live from SCMP Studio. I'm Olga Wong, Hong Kong News Editor of the South China Morning Post. So today we'll be discussing this year's budget and see whether Hong Kong can emerge from an economic recession. We are pleased to welcome our Honorary Mr. Paul Chen, Financial Secretary, and Mr. Paul Ho, our tax specialist from EY, and moderating with me is Suraida Ibrahim, our Deputy Executive News Editor. Before we start today's webinar, we need to give a big thanks to EY. EY has been our platinum sponsor since 2013, and as a global leader in professional services, EY is devoted to helping companies navigate opportunities in the new normal. So now, ladies and gentlemen, cast your eyes on the screen.
This time of change allows us to look ahead through a new lens. A chance to reframe the future, to uncover unseen opportunities, for organizations to ask new and different questions and create unexpected answers. How can you transform at speed to build value that lasts? Is your transformation plan radical enough to thrive? Has this moment changed customer expectations forever? How can technology help you reimagine your working world? Redefining how we live, work, learn, and consume. Rethinking the role of enterprise. So ask yourself, are you reframing your future? Or is the future reframing you? Transforming to create long-term value for business, people, and society as a whole. Building an even better working world. Find out how we can help you with end-to-end transformation to uncover opportunities now, next, and beyond.
Avaz, can we ask you to kick off our webinar by sharing with us some of your highlights in your budget this year?
Certainly, Olga. Suraida, Paul, distinguished guests, ladies and gentlemen, good afternoon. I'm pleased to take part once again in SCMP's Redefining Hong Kong series. My thanks to the Post for giving me this welcome opportunity to speak to you about the 2021-22 budget. This is my fifth budget. Over these few years, extremes have become the taxing norm. Consider, we have dealt with a record high surplus, a record high deficit, and now a record long recession in Hong Kong. None of it smooth sailing. Still, I would say that this year's budget was the most challenging one. Despite a 250 billion deficit in the background, Hong Kong is in desperate need of relief measures. And given the pandemic-driven reality of another 100 billion deficit in the coming budget, there is indeed a real need for the government to increase revenue. That and more had to be juggled while working to maintain market confidence in our public finance. Our fiscal reserve has dropped sharply this past 2 years from equivalent to 23 months of government expenditure to just 13 months. That said, I believe this year's budget has addressed these critical concerns as far as possible. Allow me to summarize the 21-22 budget in 4 broad areas. The first is judicious allocation of resources. Reviving the economy and relieving the burden of the people of Hong Kong are the heart of this year's budget. Given the financial limitations, a judicious allocation of resources is essential, with the underlying goal to create multiplier effects. Beyond boosting investment in infrastructure, I announced the issuance of electronic consumption vouchers amounting to $5,000 to each eligible Hong Kong permanent residents and new arrivals aged 18 and above. The goal is to boost local consumption, help Hong Kong businesses, and in doing so, accelerate our economic recovery. The scheme may not be perfect, but I'm confident it can achieve significant benefits. The vouchers will have the effect of crowdfunding, spurring consumption while boosting business. In short, it is making use of broadest possible base to stimulate the economy and maintain employment. We are aiming for as wide spending net as possible, including restaurants, fast food outlets, retail shops, and online shops, wet markets, just to name a few. To stimulate the job market, I'm allocating $6.6 billion to create some 30,000 temporary jobs for a period of up to 12 months. The hope, of course, is that a year from now, our job market will once again be growing, expanding naturally. To provide further support to the unemployed during this testing time, I also announced a special 100% loan scheme for individuals as an extra financing option for the unemployed. The loan will be guaranteed by the government. The maximum amount per applicant is 6 times of the individual's average monthly income during the employment, subject to a ceiling of $80,000. Freelancers are also eligible. The loan guarantee includes a principal moratorium for the first 12 months, after which the principal and interest can be repaid over the course of up to 5 years, with an interest fixed at 1% a year. Applicants who repay their loans as scheduled will receive full reimbursement for the interest they have paid. To increase revenue and reduce the daunting fiscal deficit, I have decided to raise stamp duty on stock transfers from 0.1% to 0.13%. This comes at a time when the average daily turnover of our stock market has gone from below 100 billion in 2019 to over 200 billion lately. No one enjoys paying more taxes, but given the situation we find ourselves in, I have chosen an area that will, I believe, have the least impact on the broader society. In tabling the measure, I have, let me add, duly consider the competitiveness of our financial market and its future development. Second is in our business environment. A priority of this budget and the Hong Kong SA government is to beat back the pandemic so that business and the public can get back to normal life as soon as possible. The good news is that Hong Kong's territory-wide vaccination effort is now well underway. At a cost of $8.4 billion, the program includes the purchase of over 22 million doses from 3 vaccine makers, more than enough to vaccine everyone in Hong Kong. But before the epidemic is over and the economy bounces back, I understand business and individuals are generally under considerable financial pressure. I agree that now is not the appropriate time to revise the rates of profits tax nor salaries tax, both being major sources of our revenue. To show our support to business, we will continue to waive profits tax by 100% with a ceiling of $10,000 amid our stringent financial situation. And to accelerate business return to business, to making money once again, I have proposed in the budget measures to revive the economy, particularly on digital economy. Today, work, study, entertainment, and more are driven by online meetings and video streaming, and the pandemic's challenges have only spurred our local innovation and technology development. That brings with it fresh opportunities for both traditional industries and emerging businesses. No economy can afford to ignore this promising new normal. My budget supports the digital economy in a number of ways. I'm allocating $375 million to the TDC over the next 3 years. The Council will develop virtual platforms. This will boost its ability to organize online services and activities, and in general, to go digital. The TDC will also use the platforms to help young startups to promote their products and services. Meanwhile, we have expedited our work in taking forward e-government by providing more electronic government services. We will take one more step further to commit ourselves to provide electronic submission means and e-payment options for most government services starting from the middle of 2022. We are also developing the business version of the IM Smart digital authentication platform so that enterprises can authenticate their identity through electronic channel. We will also provide solid support to promote the further development of individual sectors. Take the financial services sector as an example. Financial services are an important pillar to support the real economy. Comprehensive and superb financial services are crucial for an economy gearing for high-quality development. The budget this year emphasizes on the development of green and sustainable finance, bond market, real estate investment trusts, securities market, insurance and risk management, asset and wealth management, as well as family offices. Through the different means, I am sure we can continue to strengthen Hong Kong's leading position in the global financial market and facilitate our country's ongoing financial liberalization. Third is on green future. Our financial services sector has long been an economic powerhouse. Green and sustainable finance will help ensure that the sector remains dynamic and in demand. To that end, my budget includes the issuance of green bonds totaling 175.5 billion Hong Kong dollar over the next 5 years, along with plans to issue retail green bonds. Creating a green economy is no less vital than building sustainable green economy, which is why my budget offers the city's first roadmap for popularizing electrical vehicles, measures including ceasing new registration of fuel-driven private cars by 2035 at the latest. We will also expand the charging network for electronic vehicles while promoting their marketing and training of technical and maintenance specialists. The government, let me add, is taking the driver's seat in the expansion of electric vehicles use. Details on the electric vehicle roadmap plan will soon be announced by the Environmental Bureau. There is more. I have set aside $1 billion to install renewable energy systems at government buildings and related infrastructure. In addition, I've earmarked another $150 million for energy audits and the installation of energy-saving appliances, free of charge, for our social welfare NGOs. And we are looking at the big picture too. Come out with a completely updated clean air plan for Hong Kong in just a few months. Building a green, livable city is central to every budget this government delivers. In the current one, I'm setting aside $500 million to enhance our country parks. The fund will give people more good reasons to visit them, from expanded barbecue and picnic sites to twin top and gambling ventures and revitalizing of wartime relics. Our harbourfront development initiative will also continue for the enjoyment of all. Last is about public finance. A budget must balance immediate needs and long-term vision while keeping a steady eye on expenditure. Given that I have pledged not to cut our essential public services, I am left with reducing government's operating expenditure, which is why there will be zero growth in the civil services this fiscal year. It is also why the government's recurrent expenditure will be cut by 1% in 2022-23. That is expected to save nearly $4 billion. On a consolidated basis, we will see ourselves in a broadly balanced budget position in the ensuing 4 years, ending 2025-26, after taking into consideration the green bond issuance and the bringing back of investment income from the future fund. As such, our fiscal measures, our fiscal reserves will be maintained at a relatively robust level to support our financial stability and to provide us with physical space to deal with unforeseen future challenges. Through it all, however, I'm confident that the Hong Kong economy will bounce back. Indeed, I expect it to grow somewhere between 3.5% to 5.5% this year, with an average annual growth of 3.3% between 2022 and 2025. Down the road, Hong Kong will continue to reap the benefits of our one country, two systems framework, and the GBA development present us with bountiful opportunities today and the generations of Hong Kong people and business to come. Ladies and gentlemen, that in short order summarizes the 2021-22 budget. I look forward to your questions, but before that, let me wish you all the best of health, business in this new year of Ox. Thank you.
Thank you, FS, for your quick summary of your budget. And Mr. Ho, would you like to share a few words with us as well?
Sure, absolutely. Thank you. Good afternoon, Financial Secretary, Mr. Paul Chen, Sharida, Olga, and participants who are virtually connected. It is my pleasure to join today's SCMP Redefining Hong Kong series, which will give me the valuable opportunity to understand from the FS his philosophy and considerations behind the budget measures. Despite the diminishing fiscal reserves, the budget still includes certain one-off tax measures, though generally less generous than those of last year, in an effort to support individuals and businesses dealing with the unprecedented challenges arising from the COVID-19 pandemic. The budget has taken on board a number of novel measures proposed by the public and businesses, and I'm particularly pleased to see that the proposal by EY of distributing $5,000 electronic consumption vouchers has been included. In addition to encouraging local consumption, I hope that the government will also take this opportunity to provide subsidy to small business to help them install contactless payment facility so as to accelerate the penetration rate of mobile payments in Hong Kong. The proposed special 100% loan guarantee for the unemployed, while affording an alternative financing option for those squeezed out of the job market, may be too limited in scope. Given that Hong Kong still has over 900 billion of fiscal reserves, the scheme could perhaps be further extended to cover those who are underemployed or put on no-pay leave. With the fight against COVID-19 and associated relief measures significantly depleting the government's fiscal reserves, the budget has raised the stamp duty on stock transfers as a means of raising revenue. Although any tax increase would be unwelcoming, such an increase appears to be the milder alternative to raising profits tax and salaries tax, as well as cutting government spending that relates to people's livelihood, covering education, healthcare, and social welfare. While Hong Kong should not race to the bottom on share trading costs, considering that major international financial centers, such as the US and Japan stock market, do not collect any stamp duty, and the mainland only imposes 0.1%, the government should continue to closely monitor the situation after the hike is in effect and appropriately adjust its stamp duty policy when necessary. The budget has also mapped out the road to recovery and proposed a raft of measures to help stimulate the economy. As a tax practitioner focusing on financial services, I'm particularly pleased to see that the government has undertaken to review the tax arrangements with a view to attract more family offices to be set up in Hong Kong. It is also welcoming to see that the government has implemented a number of tax incentives in recent years, such as tax concessions for corporate treasury centres, ship leasing businesses, insurance businesses, as well as allowing super deduction for qualifying R&D expenditures. Whilst it is important to formulate tax incentives that can address the needs or issues facing targeted industries, it may be equally important to monitor and evaluate the effectiveness of the incentives on a continuing basis post-implementation to ensure that they generate the intended desirable effects. I believe that through such a review mechanism, enhancement measures or remedial actions can then be taken to better achieve the objectives of the tax incentives involved. The road to recovery from the COVID-19 pandemic is challenging. Collaboration and cooperation are key. No single person can do it alone. And I hope that through this and future forums, there will be a continuous exchange of views that enable all of us to work together to rise to the challenge. Thank you.
Thank you, Mr. Paul Ho and Mr. Paul Chen. We are very fortunate to have two Pauls in this today's session. And I can already see that there is a bit of a spark of debate on the issue of stamp duty, but we won't go there yet. Let's start with something simple, and that has to do with your growth forecast, which you have placed at 3.5 to 5.5%. That, to most people, is a rather optimistic forecast. Where is that confidence coming from? What do you see as the key drivers of growth?
Yeah. We are quite confident with our forecast of this year's economic growth in the range between 3.5% to 5.5%. Number one, our economy start to have growth since the second half of last year. Actually, on a quarter-to-quarter basis, the third quarter last year, the fourth quarter last year, both registered growth. So it is with growing momentum. If not for the fourth wave of the COVID-19, it would have been much better. But now the COVID situation is pretty much under control and the vaccination program is rolling out. It is quite hopeful that domestically we will see increased economic momentum from the middle of this year. This will also help by the counter-cyclical measures contained in the budget, including the electronic consumption vouchers and the others. That alone would provide us with a cushion of about, according to government economists, about 2% of growth. And then if we look externally, mainland economy is expected to continue to grow strongly. That will give support to our export services and export of merchandises and related services. And globally, the US and European countries are starting their vaccination programs. They are very keen to revive their economy. It is quite hopeful from the middle of this year they would be in a much better shape in terms of containing the COVID, regaining economic momentum. The IMF has also been giving out an estimate of global economic growth of 5.5%. So taking all this into consideration, we are pretty confident that we will be able to achieve 3.5 to 5.5% growth. One last point, even if we came at the end of the day close to the upper end of this range, our economic size is still smaller than 2 years ago, the starting of the recession. So we will be able to see catch-up growth in 2022 and afterwards. That's why for the medium term, we use a trend growth of 3.3% instead of a 2.8 in previous projections. Yeah.
Yeah, I think I would echo FS comment. If we look at the international data, market data and analysis, they are all estimating Hong Kong to be growing at between 3.5 and 5% for this year. So I think it's quite consistent in terms of what the market sees. And again, as FS has pointed out, the IMF has projected a global economic growth of 5.5%, and China is 8.1%. And I think since we need to be very closely connected with the mainland and riding on the benefit and the growth engine of the mainland through the internal circulation, that will help bring Hong Kong up to speed and up on the recovery curve.
But what if we are seeing a fifth wave of infections? Do you have a backup plan for us?
Well, I think we have been learning from experience. Last year, we saw the COVID situations fade off and then came back. So over the past few months, we have tightened up in terms of possible imported cases, in terms of expanding our testing capacities, in terms of compulsory testings in response to occurrence of infected cases in the community. And also the vaccination program is rolling out. So although on the one hand we could not rule out the possibility of another wave, but on the other hand I think we are better experienced and better equipped to deal with the situation, and if we have the support of the community on the vaccination program, that will provide us with a community-wide protection, and that will help us to sail through that particular situation if it really happens.
FS, if we can stay on the subject of macroeconomy for a few more questions
Sure,
before we get to the exciting part about stamp duty. You talked about green bonds, and clearly this is something that you are very keen on, but then so have other governments. Singapore is doing it, the UK just announced the same yesterday, and in fact the UK has gone a step further. They're offering retail savings green bonds. Is this something Hong Kong will be doing, and doing so aggressively?
We will be doing very aggressively in terms of green and sustainable finance. This is a global trend. Europe has pledged to have carbon neutral 2050. The mainland 2060, and we have also announced our carbon neutral target. So globally, the move towards green economy is so clear. And according to some statistics, according to some think tank, the global, in the process of migrating to the green economy, there would be a substantial demand for funds to fund all these projects in the order of about trillions of dollars in the coming years. So public money alone would not be able to sustain all this. Private capital has to come in to bridge the gap. So we see tremendous opportunities. That's why we are taking a multi-pronged approach to tackle that. Number one, the government green bond program. Number two, we will provide incentives for people to come to Hong Kong to issue green bonds. Actually, in terms of bond arrangement, we rank number one in the region. And in terms of new bond issue arrangements, we also rank number one. So we are very well positioned. We also mobilize the regulators to set up a cross-agency steering committee to coordinate the efforts so that we have our objectives aligned, and then everyone work together. Retail green bonds is definitely on our mind.
I think may I just add on top of that? I think in terms of building that infrastructure and the green bonds, I think one of the things from a tax perspective is offering tax incentives for, in terms of two levels, for the issuers to attract them to come to Hong Kong to issue green bonds. So there's already measures in place in terms of providing subsidy in terms of the issuance. But then from a tax incentive perspective, because of the extra additional compliance costs, third-party verification costs, etc., it becomes quite expensive to actually issue and continuing with the compliance of the green bonds. One of our suggestions as EY is to provide a 200% tax deduction for the qualifying expenditure of green bond issues, so that they get the benefit of the tax deduction to promote more green bonds to be issued in Hong Kong. And the second level is actually the investor level, to offer tax exemption for investing into these green bonds. That will attract more investors to be investing into the bonds, similar measures that we have on like ETFs, where people, I think from a stamp duty perspective as well, whether we can consider to exempt stamp duty on trading of green bonds just to promote the product.
Okay, hang on the stamp duty part, but on Bond Connect, you've announced it, southbound trading is in the works. Will it happen this year, and when exactly this year, and how are you going to do it, and how big?
The Hong Kong Monetary Authority has been working very closely with the People's Bank of China on the mainland. Our target indeed is to have the southbound Bond Connect to be launched as soon as possible. Within this year is our target. We are working very hard to prepare for that. And we are also preparing ourselves in terms of the infrastructure. The CMU, the Central Monetary Unit within the Hong Kong MA, which will be a very important infrastructure in terms of being the custodian for the bonds. We are gearing that up as well. So with increasing product offering in Hong Kong and the increasing interest of mainland investors in allocating their investments internationally, southbound Bond Connect will be a very exciting development.
Right. A year is a very long time in this era, so could you narrow the time frame to maybe Q2, Q3? What are we looking at?
We are aiming to do it as soon as possible. Well, we will do our best.
But your own estimate, what would be considered a successful launch? Q2, Q3, Q4?
Probably the early second part of this year.
Okay.
So here comes the most exciting part. We all hope to discuss about is the stamp duty. It's quite the bold move to many of us that you have decided to raise the cost of transactions for stocks. But then many of us have some kind of worries that it will undermine the competitiveness of our stock market. But then earlier on you defended that the competitiveness is not solely relying on the transaction cost, but also the creativity of the system, and you suggested there could be more reforms can be done to our system to improve the competitiveness. So do you have any initial thoughts in mind that you will share with us here?
Well, in terms of investing into stock market, of course the capital gains, the capital appreciation is the most important consideration for the investors. Cost is something they have to look at, but the cost is not just the acquisition part, but also in totality, people need to look at whether there is withholding tax on the dividends, whether there will be tax on the gain, on the subsequent disposal of the shares. In Hong Kong, we do not tax we do not have capital gains tax, we do not have dividend tax. So if you take all those together, and also in our market, the fees and charges are pretty minimal. So overall, cost-wise, I think we are not uncompetitive. And to me, what is important is to look at the competitive position of our stock market vis-a-vis investor interest and our competition. Now, market about 80% of the market cap are mainland companies, 90% of daily turnover are mainland related companies. So the unique attraction of this market is that with the growing economic significance of the mainland, if international investors are keen to invest in mainland-related shares, they will come to this part of the world, Hong Kong or mainland. And here, we do not have exchange control. It's very efficient market. The breadth and the depth is so deep. So this is kind of, we are in such a unique position that in terms of competition, we are favorably positioned. And looking back, the experience is that if we are able to innovate ourselves, to keep pace with market development in terms of product offerings, in terms of the availability of products for the investors, we can do better. The reform in listing regime back in April 2018 is a case in point. We did the listing regime reform, allowing weighted voting right companies, innovative companies with weighted voting right structures to get listed. Biotech companies without revenue stream, without profit track record, allow them to list here. Now we are the second largest biotech fundraising platform in the world. And thirdly is allowing mainland companies to come back for secondary listing. With all this effort, the market cap of Hong Kong stock market gone up by 25%. The daily turnover, as I mentioned in the speech back in 2018, it is about 100 billion average daily turnover. Now it's much, much bigger. So the real challenge for us in the government is to work with the stock exchange, the SFC, to enhance the product offerings of this market, and to talk to the central authorities to get their policy support. For example, the launch of Asia's futures in Hong Kong, the further broadening of the connect arrangements. So all these are on our card. We will spare no efforts in terms of further developing the market.
I guess just from leading on from our opening remark, saying, I mean, we've hiked the rate, but would the government be I mean, as always, be monitoring the position internationally and locally, and then make adjustment to the rate to ensure that Hong Kong remains and stays competitive, in the stock market?
Yeah, thank you, Paul. We will continue to monitor the market and its future development. In our decision-making process, the competitiveness of our market has always been one of the key consideration. Because financial services is so important to us, and apart from the equity market, in the budget we mentioned about developing the fixed income market, family offices, asset and wealth management. So we will spare no effort in further developing Hong Kong as an IFC, and increasing our attractiveness.
And you have mentioned some principles for broadening the tax base for Hong Kong. For example, you said one of them is to make those who can afford to pay. So I just wonder if you are referring to tax for luxury goods like wine and cigarettes, and what else do you have in mind?
Well, yes, one of the key principles in taxation is paying according to ability. On the one hand, we pride ourselves as a simple low-tax jurisdiction for a long time, and that has been serving us well. But on the other hand, facing increasing recurrent expenditures in the past few years, and increasing public expectation on public services, we may need to increase expenditure further where justified. And we have to find money to fund all this. So in the government, under the tax policy unit, we look at different options. At the moment, we found that it might not be the appropriate time to adjust, say for example, the profits tax rate or salaries tax rate, because people are suffering. And also internationally, the BEPS 2.0 development may have impact on us in terms of our competitiveness and also in terms of the possibility of bringing additional revenue. So we, in the government, we do not have a predetermined position now. We continue with our research and preparation, and any tax increase, particularly any new taxes to be introduced, would need the community to have an informed debate so that we can gather together, at least with majority will, to move forward what to be done. But at least in this budget, we talk about the rate system review. Our rate system, in some way, is similar to the property tax or council tax in Western economies. People pay tax according to the rental value or capital value of their properties. And at the moment, our rate system is an uniform rate. Is there a possibility of applying differential rates to properties of different values or of different use? Would it be possible to us to be more targeted in terms of providing relief to owner-occupier, but on the other hand, taxing a little more for those owning it for rental income purposes? So this we will look into in the rates study.
But FS, without sounding very pessimistic, you tried vacancy tax 2-3 years ago, and you had to abandon that. So why are you optimistic that this time you can push ahead and succeed and get buy-in?
At that time, the vacancy tax rate is for another policy objective. It was raised as a topic when the market at that time, the residential property market has been overheating, and we start to see vacant units, newly built units left vacant with the developers without timely supply to the market. So we seek to use that as a policy tool to push the supply to the market. Theoretically, if we can achieve the policy objective, we will not be able to collect the tax.
Right.
Yeah, because the developers will roll out the properties as they complete. So it is a different matter.
Right. Okay.
But speaking of policy objective, the property tax you have just mentioned is closing the wealth gap part of the policy objective?
Closing the wealth gap would be a much bigger agenda to address. Tax is, of course, one means, and resorting to that particular means require a fundamental review of our tax system. And it is not the way to tax people, but the consensus of the community as to how tax as a means to address that particular issue, the wealth gap issue. That is one area. But to address the wealth gap, I think property is one key area. Because nowadays, with quantitative easing all over the world, people are talking about asset bubbles, talking about appreciation in properties. So resolving the property issue in Hong Kong is an important matter. Also, in terms of equal opportunities for children, for young people, to pursue their dreams, to have upward mobility, is another area. So I think this issue you mentioned, Olga, is a much broader issue worth a lot of thoughts and discussion in the community.
Are you willing to tackle on this, the wealth gap issue?
Tax alone may not be able to do that, although it is a very important policy tool. But at the moment, it seems to me, at the moment for the community, the number one, and the government, the number one priority is to fight the pandemic, to put COVID-19 under control, to enable people and business back to normal operation as soon as possible. And the second equally important priority at the moment is how to revive the economy. And the issue you mentioned about the tax issue is something important but requires really good preparation to enable an informed discussion to be undertaken.
Yeah, I would agree. I think given the current situation we're in, it's probably not the appropriate time to talk about raising taxes or introducing new taxes, but I think the government should be studying it when the Hong Kong economy comes back to normal and we've got a pretty better fiscal, kind of in a more comfortable fiscal position, then we can then start, as the FSS has said, consulting with the community as a whole and the stakeholders to see what taxes are appropriate for Hong Kong or what additional revenue source is good for Hong Kong. Because I mean, we've gone through the pandemic and we've seen that having a sustainable revenue stream is very important to maintain the fiscal health of Hong Kong.
How about moving on to something happier?
Oh,
$5,000 consumption voucher. What sort of modifications will you make after taking the public views? Like, for example, can we spend more each month?
Well, Olga, you know, this $5,000 electronic consumption voucher, the key policy consideration is to use this as a tool to help spur consumption and thereby help revive economy quicker. And of course, at the same time, in a way, provide some form of relief to those individuals. We have been listening to the views of the community. The original intention is to pay that out by installments, and each installment has to be spent within a short period of time so that it will be able to achieve maximum impact. We note the concern and the suggestions from the community. We keep an open mind. My colleagues has started the discussion with store value operators like Octopus, looking at the technical feasibility, and also we will be discussing this further internally, how best to strike the balance. On the one hand, enable this money to be injected into the domestic economy as soon as possible, but on the other hand, allowing sufficient flexibility to cater to individual situations. Yeah, we are looking at it.
I think one of the options that we've heard from the market is maybe in terms of the distribution, let's say 1,000 per month. Is it better not to have it in a 1 month expiry, but go a longer expiry? So you still give out the 1,000 each month, but then the expiry is at the end of maybe the program, let's say 6 months. So to your point, giving more flexibility for the community to how they want to use, because I've heard on the news some people would like to buy a mobile phone, and someone would like to spend it on like daily goods.
Yeah, thank you, Paul. We know this sentiment from the community, and also, as you know, it is very diverse in this community. We try to accommodate as the best we can. We are still looking at it.
Right. First, in your budget speech, you talked a fair bit on the fraught U.S.-China relationship and how this will make things rather difficult for Hong Kong. But then some people are saying that Hong Kong has been a beneficiary of that very difficult relationship because of the influx of mainland investment that would have otherwise gone to the U.S. and the secondary listings and the record number of IPOs last year. So what is your view on how actually Hong Kong does stand to benefit from a difficult relationship?
Well, the relationship between the mainland and the US will continue to be tense, although the administration of the US government has changed, but the fundamental deep-seated issues between China and US remain there. We expect this to continue. There may be ups and downs, but hopefully there won't be any breakdown in the relationship. But during these ups and downs, there may be challenges for us to cope with. Just like last year, there were so-called sanctions against some of the officials, and also some changes in US policy towards Hong Kong. We have to deal with it. We have to prepare, have contingency plan for various scenarios. But on the other hand, as Sharada, you rightly point out, traditionally Hong Kong has a very unique role to play, meaning that this is a gateway, a very important gateway and window, the East meeting the West. We will continue to enhance, we will continue to harness Hong Kong's unique position under the one country, two system. On the one hand, by participating in the internal circulation of the mainland, help us capture their consumer market opportunities. On the other hand, with the one country, two system, with our international network, we can help with the international circulation aspect of the mainland economic development strategy. Financial services is one key area. We can play a very proactive role. Not just the property market, but also internationalization of renminbi, asset management, wealth management, a bridge between international capital into the mainland, like the Connect arrangements, and the domestic and the mainland capital going into the international market. Aside from that, innovation and technology is another area that we think we have a unique role to play. By working with the neighboring cities like Shenzhen, Dongguan, so that we can build a complete value chain from research to commercialization to mass production. That is another area. So we will continue to monitor the situation and to find a way to maximize our unique positioning.
We have quite a number of questions coming in from the audience, but before we hand over to the audience, I think there's one more question, and this has to do with HKEX and the recent appointment of the new CEO. I think there have been some market murmurings that the appointment of an American banker over an institution that is going to have or has had a lot of dealings with mainland companies, mainland authorities. Will that pose a difficulty in the communications that will have to take place between HKEX and the mainland? What's your view?
The appointment of CEO is a matter for the board of the Hong Kong EX, subject to the approval of the Securities and Futures Commission, and they have completed this process. The success of Hong Kong EX has, in the past, been very much by capitalizing on the unique position of Hong Kong in the economic development of mainland. And Hong Kong become a preferred and premier fundraising platform for mainland companies seeking international capital. And in recent years, become a conduit. International investors through this particular conduit investing into the mainland. And this two-way traffic in the future will be stronger and stronger. If we look at the allocation of international capital into the mainland, by referencing to the weighting of the various index assigned to mainland companies, this flow of capital from international to mainland will continue to grow. So I think going forward, on the one hand, Hong Kong EX has to continue to capitalize on this unique position that the mainland development offer to us. And on the other hand, play a very important role by bringing international investors to this side of the market. So I'm very optimistic about the future of Hong Kong's international financial center status.
But how can we strike a balance of maintaining Hong Kong as an international financial center, as well as to further protecting the security finance with the mainland, given the recent appointment?
Financial stability, financial security is a very important issue. And when we talk about financial security, it is also could be in the broad sense of national security,
right.
Because financial system is such a important system. Taking our experience last year in the government, in face of rising tension between the mainland and the US, and at that time the flattening of sanctions, things like that, I in the government has taken the lead, drawing all the regulators together, the SFC, the Hong Kong EX, the Insurance Authority, the Hong Kong Monetary Authority. This is a cross-bureau, cross-agency concerted effort. On the one hand, by sharing informations, we monitor the market, not just the cash market, but also the derivatives market, the options market, the futures market, to make sure there is nothing causing concern. And if there is red flags, we know that immediately. And also, apart from sharing information, in terms of regulatory actions, say for example, do we need to raise the margins? Do we need to do more on-site inspections to the brokers, to the banks? So these are coordinated effort across agency led by very senior government officials. And we have been doing that on a daily basis in terms of the monitoring. And we meet up quite frequently, depending on market situation, of course. We meet very frequently to assess the situation. So it is a team effort.
Okay. So let's also address some of the questions from our audience.
Sure.
They have been waiting for some time already. We have one question from Ricky. He said no time is a good time to raise tax, even though many people also agree that there is such a need from the public finance perspective. So what else are you considering to stabilize revenue in addition to increasing stock stamp duty rate?
Well, no time is the good time, yes. But on the other hand, we have to be sensitive towards the difficulty that the community is going through. And tax is such a sexy subject. Easily caused.
Glad you say that.
I do think that we do need to have an informed discussion.
Yes.
And we have to look at it not just individual new tax in isolation,
yes,
but rather a more comprehensive kind of review. So that apart from assessing the merit or dismerit of individual revenue source, we have a holistic picture. Also balancing the competitiveness,
yes,
of Hong Kong as an IFC, as a business center.
Agreed.
There's also a question about, will the deficit impact Hong Kong's credit rating?
I don't think so. Although we have to manage this very carefully, because yes, the year 2021 record deficit 256 billion. Coming year another 101 billion deficit. But in the following 4 years, we will be in a largely break-even kind of situation by issuing green bonds. After the issuing of 175.5 billion green bonds, our debt ratio is still very low, single digit of our GDP, so very safe. And it is for funding capital projects, not funding recurrent expenditure, so we won't lose our financial discipline. Towards the end of this mid-range forecast, that is 2025-26, our fiscal reserve will stand at about 770 billion, which equivalents to about 12-month expenditure. Still a robust reserve. So I hope by issuing green bonds, bringing back the investment income from the future fund, that will give us breathing space to work things through. No matter it is containing reducing expenditure or plus increasing our revenue.
But will the government be more proactive in managing its reserve? Some said, the return of future fund is not very satisfactory.
Our reserve has been parked with the Hong Kong Monetary Authority to do the investment. And this investment, broadly speaking, has been split into two parts. One is investment portfolio, which is usually on fixed income or equities, which relatively speaking more liquid. If we need it, we can liquidate it and bring back cash. But another portion of it is for long-term growth portfolio. For the long-term growth portfolio since inception in 2009, up till now the internal rate of return is double digit. It's more than 10%. Not bad actually. Particularly if you look at the volatility in the market and also the low interest environment. So we will continue to find ways to improve the return of the fiscal reserve and making good use of it. Say for example, recently we set aside about 10% of the future fund in the order of about $22 billion to form a Hong Kong growth fund, which is to invest in sectors that will enhance the competitiveness of Hong Kong in the longer run, but on the other hand give us a better risk-adjusted return. We'll continue to do that, but we have to be very careful because in a way we also need to provide the needed liquidity for the government if the money is needed.
How about a question on land and housing as well?
Of course.
Because you are also steering a committee within the government on land supply. The number of homes in private sector will be a new low this year. And the major source of future land, like Lantau tomorrow, is very far from being materialized. So will it force up the property price, and how Hong Kong can cope with the shortage of private homes? Do you think it's a political price we have to pay after adjusting, giving more land for public housing?
We have to monitor the situation continuously and carefully, and if needed, we may need to adjust some of our policy. But so far, it seems to me, so far there is not yet a case for us to make major adjustment yet. If you look at the private residential property market, 2020 in terms of pricing, in terms of transaction volume, first hand and second hand together, it's more or less at the 2019 level. So not much increase, broadly stable price level, even the volume. When compare the price to the height of the recent hike back in July 2019, the residential market is still on average about 4% below the peak. In the coming years, according to the statistics compiled by the Transport and Housing Department Bureau, the projected return the projected supply of first-hand residential property in the coming 3 to 4 years remain at about 92,000 units. And close to 80% of them are small to medium-sized units. So it is relatively stable when compared to 1 year ago or even 2 years ago. The new land supply, as you rightly point out, as compared to the previous administration, has been adjusted downward from 40% of land supply to 30% of land supply. But because of the projected new supply in terms of computer units stay at a relatively stable level, the impact of that policy on the short to medium term new supply is not that obvious. In terms of new land supply, CE mentioned in her policy address about the Tuen Mun area, the river terminal area, about expediting the northern link, whereby it will unleash the property development potential along the railway. That would be new supply apart from the proposed Land Out Tomorrow project.
So you don't foresee the property price will go up?
Well, the changes in property price has to do with a number of different factors. It is affected by a number of different factors. Interest rate is one. Whether there would be influx of capital is another, and also demand and supply situation, of course, and the economic situation, the unemployment situation. So all this will affect property price. We have to be diligent in terms of monitoring the situation.
Okay, one more question, quite an interesting one, about how the Heritage Foundation has taken Hong Kong out of its annual index on economic freedom, and its explanation is that it sees Hong Kong's economic policies as being controlled by Beijing. What is your response?
Well, the Heritage Foundation has included Hong Kong in its report for 27 years. I think we have remained at the top for 25 years, and last year we dropped from the first to the second, but still way ahead when compared to the third one. I do not agree that our economic policy has been taken over by the central government. What I do think is, it seems to me the decision of excluding Hong Kong from the report is not justified. It seems to me when they arrive at that decision, it must have been clouded by their ideological inclination and political bias. Objectively looking at Hong Kong, under the one country, two system arrangement, our core economic competitiveness in terms of free flow of capital, free flow of talent, information, free flow of goods remain there. The Hong Kong dollar remain an independent currency linked to the US dollar. The rule of law is very much respected here. The independent judiciary is working here. So I'm sorry, I do not agree with their assessment.
Okay, thank you, FS, and thank you, Paul. We really appreciate the spontaneous support and the long-term commitment in your sponsorship for our Redefining Hong Kong series. Thank you, everyone, for joining us today. But our conversations do not stop here. Please join us at the Lincoln Community Redefining Hong Kong Leadership Network to network with our attendees and also brainstorm ideas for more meaningful progress for the city. See you at our next event. Have a good day ahead.